Welcome back, YouTube. So in today's video, I'm going to be talking about the bounce we got from around 10 cent, which is something what we expected, but the question is whether or not it will hold and will we get a retest. And I'm also going to discuss the likelihood of whether or not we could potentially get a further breakdown, all in today's video. So what we're looking at here, this is pretty much the heat chart on Bookmap. Link in the description if you guys wanted to have access to this and help it improve your trades or just know where the pools of liquidity are. But what we're seeing here is Dogecoin is actually building up resistance and support here. Have seen Dogecoin fight back before at different levels, and when this is kind of what we expect and we talked about as far as for the chart saying that we can get that breakdown to around 6 cent, but you can't really chart the community and the point at which the community is going to value the coin oversold or pretty much undervalued. And you can't really chart that, but we just know that psychologically there's a psychological aspect of around that 10 cent that more than likely would trigger some buys, and that turned out to be the case. The charts do say 6 cents, but there is a high probability that we're going to get the brakes pumped on that around 8 to 10 cent. And for right now, the 10 cent is held up as literally a level of support. And not only that, we are now building, and that's what we're looking at here. I'm going to take a scroll over to the chart here, and this is pretty much some liquidity here that was, anything that's darker than the blue, you'll start getting yellow, orange, and then red. Obviously means a lot of support, and you'll see that we're building here. This is at around like 10.9, and we'll see that we hit that pool of liquidity. We got some green candles here. They tried to push it down. This is this big red ball here. They tried to push it down. And we pretty much came down, but this pool of liquidity literally here caught it, and we immediately started getting some buy orders, and they tried again. And again, the liquidity here, these orders started executing. We got some green candles. They're trying. It hit some red area here. Big buy orders coming in. And you'll see they're literally trying to get it to break down. And this is them, a huge sell order coming in. But again, this is massive support here coming in at around this 10.9 range, and we'll see there's this green candle here and red. So this is literally, and a lot of times people, and the reason I like looking at charts like Bookmap and stuff like that is because a lot of the times people don't realize what goes on in between the candlesticks. We just look at the candlesticks, look at the daily, and just be like, oh, here's what's going on. A lot of times there's an actual, literally like a fight with the buy and the sell orders. And really the traders and some of these institutions as far as for breaking down these assets and getting them to trend the direction that they want them to go. And you can literally see the back and forth here and literally saying, okay, well, we got that bounce here. Okay, let's create some more shorts. We're going to come in and try and get the coin to break down. Those buy orders execute, we get the bounce. And then this is literally how you kind of gear up to build support like we're doing here, this ladder approach up. Or this is how you can kind of tell ahead of time, okay, it looks like they're gearing up and they may actually break support. So this is really a useful tool here to kind of get an idea of what's going on inside of those candlesticks. And the main question of the hour is whether or not 10 cent will hold. And we have to look at the macros here and say, what's the likelihood that we're going to get a retest? What's the likelihood that they're going to need Dogecoin to go lower, especially since the market has literally been, painting the streets red this past week. And so here's the thing in the macro. We know that the Fed has raised the interest rates. They pretty much said that they're going to raise it 0.50 basis points for the next 3 times consecutively. And this should be, in their opinion, all we need to get inflation under control, right? And when they do this, and this is pretty much a double from the 0.25 basis points that we were talking about 30 days ago, this makes money more expensive to borrow. This makes these heavily leveraged positions, these positions that are short, this makes a rebalancing of portfolios necessary in order to not be squeezed or to not owe a lot of money in interest to stay in these leveraged positions. So typically this will trigger rebalancing. This will trigger getting out of some positions that are deemed risky, aka those over leveraged positions, or even just waiting on the sidelines until this thing bottoms out before you start making these heavy entries. But what we know about Dogecoin is it's one of the most held assets, especially it's the most held crypto. 65% of all wallets contain some Dogecoin. We know that. So the issue here is you cannot afford for Dogecoin to not sell off when the rest of the market is selling off. This is why yesterday I was looking at the charts here and they're like, oh, well, it's just the selling pressure. It is not just the selling pressure. This is artificial selling pressure. If Dogecoin cannot trend down without massive shorts, we're going to take a look here at the candle in a minute, but Dogecoin, and yesterday we got that big breakdown. The last couple of days we got those breakdowns. These short candles were huge. We're talking rallying from 21-day moving average to 200-day moving average. If this was simply the community selling off, you would not have seen that number of shorts coming in to create those sell orders in order to push Dogecoin down. But again, I get it, because if you're going to sell out the positions that you're heavily in, especially those coins that the institutions are mostly involved in, like Bitcoin, a lot of those, big three and stuff like that. And then you have coins like that are mostly owned by the community, like Doge. You cannot afford to have green in a red market, because if you have green in a red market, people are going to say, oh, look, green, let's hedge with that. And then that's how you get the coin that you don't want to go up dramatically. So I get why we have the increase in shorts, but I just want to let you know that if we take a deeper look, this is not the community that's actually selling off. So what we have here, this is actually the 200-day, this is actually the Dogecoin charts that I was speaking of just a moment ago. And this is pretty much Doge rallying from the Doge shorts rallying from the 200-day moving average, the 21-day moving average up to the 200-day moving average. That's the yellow to red line here. Coming back again on the 10th and pretty much testing that 200-day moving average. And then today we've seen a slight pullback, but they are still in those short positions to keep that negative pressure down on Doge, because we know the second shorts roll back, Dogecoin rallies, because these are not real sell orders. This is why they're always in such opposite directions. And we also see that Dogecoin does not have a major sell-off unless these shorts are present. If Dogecoin was having these sell-offs and the shorts were pretty much maintaining their normal levels, they were around their 21-day moving average or something like that, and we saw this sell-off in the market, then yes, I would say, hey, that's retail simply just selling off. But every time we need this breakdown, or if it's just specific to a Dogecoin catalyst and the market isn't selling off, we see these types of spikes in the shorts. This is to create those sell orders to kill momentum or to get Dogecoin to trend down with the market. So the question remains is if the 10-cent mark will hold with Dogecoin. And what we have to look at is what is the likelihood that they need more money, that they need the opportunity here to raise additional capital for these positions. And that chance is really likely that they're going to need more money, because when they have to technically have Dogecoin trend down with the market as well, otherwise that event that happens earlier where you have the green and the red market, which is the complete opposite. So this means that we could very well see them gear up to retest that 10-cent mark. Now, does this mean that they're going to be able to break it, or that the community can't push back like they did this time and get the bounce? Absolutely not. No, that is totally possible. And I believe that we are going to have a retest of that line at some time in the future. Maybe even sooner than we think. But just know that until the macros are fixed, no matter if we get a rally here, I don't care if it's in Bitcoin or whatever the case may be, until the macros are fixed, this is not over. Typically, especially if they need to raise money, we've talked about this a few times, you have a couple options. You can sell right now, or you can sell later. Selling now is something like what we've seen over the past couple of days, where you just pretty much gut the market and raise capital. Another sequence that you do is you start pumping the market immediately. Then all that new money comes in and they say, hey, the dip's over, I better get in now. This is it. We're off to the races here. The market's changed. And then, of course, they jump right in and start pumping as well. And then you pull the rug from underneath them, and then boom, you raise additional capital on an asset that you were going to sell anyway. So just kind of keep an eye on that when we start seeing the markets pump, because until those macros change, we have not seen the worst of this or the last of this. For those of you asking about DCA and stuff like that, again, I'm not a financial advisor. Do what's best for you in your portfolio. But depending on where, and this is in my opinion, depending on where your DCA is, if you're looking to bring that down dramatically, especially around these prices, do not try and time the market, because it is unlikely that Doge is going to be anything stable at these prices. If we do get that breakdown, you've seen the pools of liquidity there. Typically, we get a bounce immediately, or they come in to provide that support right beneath it. So we get that next tick down, we're seeing a bounce. So if you are 20% or greater, if these prices are 20% or greater, Obviously, the greater the better, especially like anything like a 50% or above below what your current DCA is. I would say it's not wise to just try and wait on like 6 cents, because chances are, even if we do hit 6 cents, you won't be able to catch it there. There's nothing that says that Doge is going to consolidate at 6 cents for like 2 days and you're going to have an opportunity to be able to execute an order there. There's nothing on the charts right now that to suggest that. So if you are, and I have a video on the proper way to DCA and stuff like that, if you guys want to check it out, it'll explain those percentages I just gave you a little better. But if you have the opportunity here to bring your DCA down dramatically, I'd say it is within your best interest to take advantage of that. We will keep track of the pools of liquidity here and what the chart's saying going forward here. We're facing some turbulent times in the market, but it's nothing that we have not discussed beforehand and that we're not prepared for. So thank you for watching this video. Subscribe to the channel if you want to hear more from me. Like the video and turn on the notification bells. I know some of you are not getting the notifications. So just turn those on. And I normally post a link to my previous video on the community section. Check out BlockFi in the description as well. You get up to $250 if you open an account with them. And that's including in Bitcoin and Ethereum. I appreciate all of you. Thank you. Until next time.